So paper 8 is, I have taken the questions from accounting equations. Right? So in our revision class, we are doing the accounting error corrections. In the revision class, we are doing the error correction. So parallel to that, we are connecting the paper class. So today, we have about 15 MCQ questions and 3 part 2 papers. So we'll start with the question from second part, then we'll do the MCQs, and we'll try to do the remaining part 2 questions. Okay, right. So let's start with question number 2. So let's start with question number 2, which is preparation of journal entries and adjusted statement of financial position. Okay, so the question is, Nimal is a sole proprietor, and the following statement of financial position has been prepared by his trainee accountant. So we have a statement of financial position or the balance sheet as at 31st December 2012. Plant and equipment 300,000, current assets, inventories, debtors, cash and bank, and there is a suspense account. There is a suspense account with 100,000 balance. Capital 400,000, net profit 150, and there is one liability, creditors 115,000. The following errors were revealed later. There are 4 errors required. Journal entries to rectify the above errors and the balance sheet after correcting the above errors. Right, so we need a general journal. So first I will create the general journal. Date, description, debit and credit. Date, description, debit and credit. Now let's do the errors. Let's do the correction of errors. So number 1, discount of 3,500 given to customer has been recorded as 5,300 in the discounts, both in the discount allowed and debtors accounts. So this transaction, let me do a working. Working number 1. Double entry for the discount allowed is discount allowed account debit and debtors account credit. That is the double entry. discount allowed account debit, debtors account credit. So discount allowed 3,500 given to customer had been recorded as 5,300. So in both the accounts, it has been recorded as 5,300. 5,300 debited and 5,300 credited. So the actual amount is not 5,300, it should be 3,500. So the difference is 1,800. So from both the accounts, we have to credit both the account, we have to deduct 1,800. Discount allowed account credit, from the debtors account also we have to deduct debit. So the correct entry, correction entry is debtors account debit, number 1, 1,800, discount allowed account credit 1,800. Next, correction of discount allowed 3,500 recorded as 5,300 in both accounts. So that's how we correct the error. Correction of discount allowed 3,500 recorded as 5,300 in both the accounts. So this is the working number 1. Recorded as 5,300, therefore we have to deduct. Then number 2. Sales invoice 20,000 had been credited twice in sales account. So let's do working number 2. Sales, double entry for sales, debtors account debit, sales account credit. So the sales account credited twice, credited 2 times. So they are not telling anything about the debtors, so we assume that debtors account is correct. Debtors account is correct. There is a question, should we do the workings in the exams? No need the workings, but it's better to do the working and get the answer, so you won't make mistakes. This is what they have done. So how do you correct this? Only one entry should be there in the sales account. So 20,000 we have to put deduct or debit the sales account. So one entry will be removed. And if you debit the sales, you have to credit another account. So what is that account? That's the suspense account. So we also need the suspense account. You can draw a suspense account. Suspense account. It has a balance. It has an opening balance, balance brought forward, a debit balance of 100,000. Suspense account has a debit balance of 100,000 according to the question. It is recorded as current asset. So we have to take that. Double entry for the sales, correction of sales, sales account debit, suspense account credit 20,000. So number 2, sales account debit, suspense account credit 20,000. Narration, correction of sales 20,000 recorded twice in the sales account. So we deduct 20,000 from the sales account, and the other entry we take it to the suspense account. That's number 2. Then the third one, working number 3. 15,000 salaries. There are some questions. Let me. Why didn't we take the balance brought forward for debtors? So for the correction, we don't need the balance brought forward. We will adjust it later. Right? I didn't take the balances from the statement of financial position to do the error corrections. You can take it. That's not an issue. Yeah, I did only the error correction. And we can take the balance. That is fine. We can prepare one debtors account and do all the error corrections through that. Right. So 15,000 salaries paid had been correctly recorded in the cash book but not entered in the salaries account. So double entry for the salary payment is cash account credit, salaries account debit. So only 15,000 credit entry for the cash book is recorded. Cash account 15,000 is recorded but not taken to the salary. So how do you correct this? We have to debit 15,000 to the salaries account. 15,000 to the salaries, and that will be credited to the suspense. Therefore, the double entry we can write it under general journal, salaries account debit 15,000 and suspense account credit 15,000. And the narration, correction of salaries 15,000. Omitted in salaries. So that's the entry for third error. Then number 4, there are some questions. If the suspense account balance is debit, should be recorded in the current assets? Yes, in the current assets. So it is, debit should be, yes, in the current asset. If it is in the credit side, we record it under current liabilities because it's a temporary account. Once the errors are corrected, this balance should be removed from the account. So it's a temporary balance. Okay. Next, 65,000 paid to a creditor had been correctly recorded in the cash book, but not entered in the creditor's account. 65,000 paid to creditor. Let's do another working number 4. Working number 4. So if you pay to the creditors, cash account credit and creditors account should be debit. So it has correctly recorded in the cash book 65,000. 65,000 credited to the cash. Correctly recorded in the cash, but not entered in the creditors account. So we have to debit creditors account 65,000. So if we debit 65,000 to the creditors account, we have to credit the suspense account. Debit creditors, credit suspense. 65,000. Now, 65,000 paid creditors omitted in creditors account. So those are the errors. So we have corrected the errors. Now we balance the suspense account. Total 100,000. So there is no further differences. The balances suspense account balance was set off. Suspense account balance was set it off. So after the corrections, there is no suspense account. Then the second part of the question, leave the journal entries. The second part of the question, statement of financial position as at 31st December 2012 after correcting the errors. So we need to prepare a statement of financial position. So let me prepare here. Non-current assets. If there is an error in subsidiary ledger, do we consider in correcting it? No, we don't correct it here. Subsidiary ledger, we have to adjust it through the reconciliation. We don't correct it here. Plant and equipment. Current assets, we have inventories, debtors, cash and bank, total assets. Right. So we can see what are the accounts which is affected the statement of financial position. Plant and equipment, there is no corrections for the plant and equipment. It is 300,000. So it doesn't change. Inventories, 120,000. It is also didn't change. In the debtors, here you can see 1,800 debit, debtors account. So that means now 55,000 is given in the balance sheet. This 1,800 will be added to this. So total 5,000 plus 1,800, 56,800. Debtors account was affected. Cash, nothing changed. So it is 90,000. So we can. Capital didn't change. Net profit will change because there is discount allowed, sales, salaries. So due to these three transactions, net profit will change. Okay, then the creditors account debit. Creditors balance is 115,000. Debit means 65,000 minus this creditors 65,000. We have to debit. So corrected, adjusted creditors balance is 50,000. Now the net profit. So what will happen to the net profit? So what we can do is we can prepare a statement of adjusted net profit. Statement of adjusted net profit. So profit before the adjustment is 150,000. It's given in the question. This amount. Net profit is 150,000. Now, due to the corrections, this will change. So how do you adjust it? Income or expense credit means profit increase. So there is a discount allowed, 1,800. Is a discount allowed 1,800, which will increase the profit. So discount allowed credit means expenses decrease. If the expenses decreasing, the profit will increase. Then sales and salaries. Those two will decrease profit. So the easy method to remember this is identify income or expense. If the income or expense credit means it will be plus, debit means it's minus. So that's how you easily remember this. So the adjusted profit will be 116,800. And finally, if we balance this, we get the answer 566,800 total assets. Total equity and liabilities 566,800. So very important to understand the adjusted profit, statement of adjusted profit. How does the income expenses affect income? So complete this and ask me any questions if you all have. There are some questions. Do we need to write the full heading of the financial position and income statement? Yes, better to write the full heading, full name of the account. Why didn't we add suspense account 100 in SRP? Because suspense account balance is now 0. Now here the suspense account balance was set clear. Now there is no suspense account. There is no closing balance in the suspense account. That is why it didn't come here. No suspense account balance. There is one more question. Sales will increase. Yes. Now there is a question. Sales will increase the profit. Yes, sales will increase, but this is sales debit. Sales debit means sales decrease. If the sales decrease, the profit will decrease. Right? That is why sales debit 20,000 was deducted, because income decrease. So the simple way to remember is income or expense. Let me take another summary on that. Income or expense credit. Remember this note. So what will affect the profit? Either income or expense. Profit will be affected by income or expense. So first you identify what are the income expenses in this general journal. And if it is credit, we need to add, increase. Plus, if it is in the debit side, we need to decrease. We need to deduct. Minus. Credit is plus, debit is minus. So if you take some of the previous questions we did in this question, see this question, general journal. These are the credit balances, either income or expense. So credit items we have to add 85,000, 58,500. These are added. And debit items 18,228, that will be deducted. Only income or expense. So first you identify income expenses from the general journal. Don't take assets, liabilities, and equity and suspense account. You take only income or expense. Highlight them. Then if it is credit plus debit minus based on this note. So I hope that's clear. Any other doubts? Right. There is an error when transferring to trial balance. Do we record in profit adjustment statement? No. If they have specific not mentioned, if it does not affect the profit, we don't. Right? Okay. Now let's why are we adding 1,800 to the debtors? Because debtors account debit. Debtors account debit means debtors decrease. Creditors account debit means creditors decrease. Debtors account debit means debtors increase. Right? Creditors account debit means creditors decrease. If you prepare a creditors account, it has a balance of 115,000. Debit 65,000. Then the difference will be the closing balance. So if you prepare the debtors account is having a balance of 55,000 debit. Another 1,800 debit. So total 56,800. Is it clear? Right. Now let's move to another. Now we'll move on to some MCQ session. Right. Let's do a game. Shall we play the game? Data corrections. So get ready. Take another phone if possible. These questions are not in the paper. Right. So here is the game pin. And who is winning the game today? Yes. What you have to do is take another mobile phone if you have. Right. So in that type www.kahoot.it, KAHOOT.it. IT. Once you log in, this is the game pin. Add this game pin with your name. So you can join. So once you join, I can see students or participants in the game. So there are 10 MCQ questions. Fine. If you have any doubts, please tell me. Let's start. Right. So we will start. We start now. Question number 1. What you have to do is, in the phone, you will get a 20 answers. It will show the answers in the screen. So you have to click on the correct color. Okay, so let's start. Transaction is totally omitted from the books. It is called, you can see the color. Transaction is omitted from the books. It's called error of commission, error of principal, error of recording, or error of commission. It's called error of omission. Error of omission. Right. So you need to understand the difference between these different types of right. So let's move to the next question. Question number 2. Before that, we'll see who got the highest marks. Right. So Faza in top, Ayaz in second, Havini in third. Okay, so let's move to the second question. Next. Question number 2. Disagreement of trial balance include which errors? Trial balance is not equal. On which error trial balance is not equal? Is it on errors of omission, compensating errors, subsidiary book is not total? So answer is wrongly totaling of subsidiary books. So if the subsidiary book total is wrong, let's say sales day book total is wrong, then that will affect only the sales account. Right? So that will make the difference in the trial balance. If we are preparing uh, only the general ledger. Okay. Right. So let's move. Right. Next question. Question number 3. Failure to differentiate between capital and revenue expenditure. So this error is called capital and revenue expenditure. So which error is explaining the capital expenditure and revenue expenditure? Capital expenditures are called assets, revenue expenditures are called expenses. So a capital expenditure is identified as a revenue expenditure. Example, we can say motor vehicle maintenance recorded in motor vehicle account, or building maintenance or building expenses or building purchases recorded in building maintenance account. So this is error of principle. Error of principle. Okay. Okay. Good. Question number 4. Which account is generally used to rectification of errors? Which account is used to rectify the errors? So we did this account in all the most suspense account. It's not rectification account or adjustment account, it is suspense account. So the error will be corrected, the difference will be transferred to the suspense account. So we use this to rectify the errors. So until you identify the errors, this will be transferred to, the errors will be transferred to the suspense account. Right. Next. Error of principal. Error of principal. Previous question also we had this. Error of principal means it's capital and revenue. Asset recorded as an expense or an expense recorded as an asset. So that's the difference between capital and revenue. Error of principal. One of the main, that's the key question in many exams we see. Error of principal. Right? So I see still you need to go through the theory parts. Next. Right. Next. Question number 6. True or false? Insurance expense of 2,000 salaries will decrease the profit. Is it true or false? Insurance expense 2000 debited to salaries. Will it decrease the profit or increase the profit, or will it not change? So, true or false? Oh. Insurance expense, if it is debited to salaries, it doesn't affect the profit. Why? Because insurance also expense. If you record in insurance account, right, that will also an expense. Salaries also will expense. So it's only a change in the account, right? So it doesn't decrease the profit. There's no change, right? So it's false. It's false. If you record it in insurance account or salaries account, it doesn't decrease additional profits, or it doesn't decrease a profit. It's such same change, same effect. Effect is same. So let's see. We have another 3 more questions. If debit column of trial balance is short in suspense account, a debit balance. If debit side is short in trial balance, debit side is short. Debit side 800, credit side 1000. Then where do you have the suspense account? Yeah, it's true. The suspense account will have a debit balance. This guy. Next. True or false? Agreement of trial balance means there is no error in of accounts. Is it true or false? Trial balance is agreeing. Debit and credit is equal means there is no error in the books of accounts. Is it true? It's false. Trial balance is equal means it doesn't confirm that there is no errors, because there are errors which does not affect the agreement of trial balance. Errors of omission, errors of principle, right? So those errors will not affect the agreement of trial balance. But even though the trial balance debit and credit is equal, inside there can be errors. So it doesn't mean that there is no errors if the trial balance is agreeing, debit and credit is equal. So the answer for this is false. Who is on top? Question number 9. Errors in personal and real accounts. So we have learned what are the accounts, type of accounts. There are 3 types of accounts: nominal accounts, personal accounts, and real accounts. Personal account means the debtors, creditors, the persons. Real accounts, as I said, real estate, PPE, property, plant, and equipment. Nominal accounts, income, expense accounts. False. Debtors account, creditors accounts, the asset accounts will not affect the profit. So what will affect the profit? Only income, expenses. So the answer is false. real accounts and personal accounts does not affect the profits. Right. So Afla is on top. Faza, Nabil, Danu, and Zainab. Right. So last question. So we'll see who will get this. Net profit is affected due to the errors in nominal accounts. Yes. So as I said earlier, right, there are three types of accounts: real accounts, personal accounts, and nominal accounts. So nominal account means income and expenses that will affect the profits. The two accounts will not affect the profits. Okay, so we'll see who is on top. Zainab, third place. Amil, second place. And Nafla. Right, so congratulations and good job, guys. So, right. So good job and keep it up. We'll continue the rest of the questions. Okay, so let's move to the remaining question. I will do 2010 A-level paper. So let's do 2010 A-level paper, part 2, question number 2. Okay. Sumudu and company reported a profit of 750,000 for the year ended 31st March 2010. So that's the reported profit. However, the following errors were revealed subsequently. There are 6 errors: required journal entries, profit for the year after rectifying the errors, amount by which the net asset increased or decreased after rectifying the errors. Right. So let's draw a general journal. Let's draw a general journal. Date, description, debit and credit. So first let's do the error correction, and after that we can do the statement of adjusted profit. Number 1. So we'll start. Number 1, inventories as at 31st March has been overstated by 50,000. So if the inventory is overstated, closing stock is overstated, how do we correct it? That means our inventory account, the balance is more. So we have to credit the inventory account. Inventory account will be credited 50,000. Overstated means over calculated. No, actual amount is 100,000. It has calculated as 150,000. Overstated. Overstated and overcasted means, overstated means the inventory value is 100,000 recorded as 150,000, that is overstated. Overcasted means casting means calculating. When calculating the total of the purchases journal, the total is overstated. So that is overcasting. So inventory account credit and cost of sales, or we can debit the income statement. The cost of sales should be debit. 50,000. The profit will reduce. If the closing stock decrease, the cost of sales increase. Cost of sales increase means overcasted means calculated more. That is overcasted. Let's say we have purchases A, B, C. A is 100, B is 200, C is 300. So when calculating the total, so actual total is 600. But if you take it as 800, this is called overcasted. Overcasted. Casted means casting. Casting error. Totaling error. Right. Correction of overcasted. Overstated. Overstated closing inventories. That's number 1. So here we don't need suspense account because I explained the overcasted. Overcasted is not here. This is overstated balance. Right? Here what has happened, recording the closing stock. in recording the closing stock. What is the closing stock double entry? Closing stock double entry is stock account debit closing stock double entry is stock account debit cost of sales credit. That's the double entry for closing stock. So if this is overstated, we have to deduct from the stock, and also we have to deduct from the cost of sales. Right, so the entire double entry is wrong. Entire double entry is wrong here. Overstated means. So that is why we don't need a suspense account. We correct the entry. Right? We adjust the profit, the cost of sales, and we deduct from the inventory. Closing stock. Income statement is debited because from the profit we have to deduct. That is why income statement is debited. So in overcasting and overcasting, depending on the so is it okay to write as purchases account instead of inventories account? No, inventory account is asset account. Purchases means this one. Cost of sales, if you write purchases here, that is fine. Purchases, cost of sales, income statement, yeah, all same effect. Inventory account is an asset account. You can't write inventory account asset, the purchases account credit here. Okay, so that's inventory account is credit. So the next question. Next one, number 2. Purchase return of 30,000 has been credited to creditors control account while the purchase return account has only been credited with 3,000. Okay, so I do a working for this. Purchase return. What's the double entry? Creditors and return outwards. Double entry for this goes to creditors account debit, return outward account credit. Purchase return of 30,000 has been credited to creditors control account. This was credited. While the purchase return account has only been credited with 3,000. There are 2 errors. So two errors here. So actual double entry should be return outwards account credit 30,000, creditors account debit 30,000. So creditors account they have credited. Return outwards account correctly recorded but the wrong amount. How do you correct this? Can you all tell me? Tell me how to correct this. We need a suspense account. Right. So let's check this. Okay, so let's check the answer. Return outward, we have to credit another 27,000. Return outward, we have to credit 27,000. So that will be correct. What about the other entry? Credited to creditors control account. You can't credit creditors control account. You have to debit. How much you have to debit? First 30,000 to remove this, and you have to debit another 30,000 as the correct entry. So debit 60,000 to the creditors control account. You have to debit 60,000 to the creditors control account. Now the remaining, the difference is 33,000 that will be credited to the suspense account. It will be credited to the suspense account. Let's keep a space on the top of the suspense account because the opening balance is not given, so we need to find out the opening balance. How is it 33,000? Because if you debit 60,000, now creditors account is debited 60,000 and return outward account credited 27,000. So there is a difference. So that difference only we have to credit to the suspense account. So what is the difference? 60,000 minus 27,000, 33,000. That's how we take 33,000. Then the third one. We credit the suspense. There is a question, why do we credit the suspense account? Because once we do this correction, there is no further difference. We debit 60,000 and credit 27,000. So once we do this, all the errors are corrected. But there is a difference. 60 debit, 27 credit means there is a credit difference. So that difference we have to transfer to the suspense account. Why? Because all the debit entries that we post, we have to make an opposite credit entry. That's based on the double entry principle. If you debit 60, you have to credit 60. So credited 27 to the return outward. The remaining we have to credit to the suspense account. Number 3. Discount allowed amounting to 6,000 has been debited to discount received account. So only the discount account is wrong. There is a question, while transferring the balance, is it always credit in suspense account? No, it depending on the question. It's always not credited. Sometimes it might be debited. Depending on the error, you either debit or credit the suspense account. So here the difference comes to the credit. That is why we credited the suspense account. If the difference comes to the debit side, we debit the suspense account. Right, so working number 3. Number 3. Discount allowed amounting to 6,000 has been debited to discount received account. So actually it's discount allowed. Recorded in discount received. 6,000 has been debited to discount received. So 6,000 discount received is debited. How do we correct this? So we have to credit, remove from the discount received, and discount allowed will be. So the correction entry, discount allowed is debit, discount received is credit. $6,000. Correction of discount allowed debited to discount received. So can you explain how 33,000 came to suspense account in purchases return? Yes, that is, if you debit 60 and credit 27, the error will be corrected. So there is a difference, no? 60 debit, 27 credit means is 33,000 credit difference. So that difference only we are transferring to the suspense account. Credit difference. That is this 33,000. Okay. There is a question. So in exam, do they deduct marks if we fail to write the narration? Yes, they deduct. Especially in the marking scheme, they have mentioned if the narration is not given, reduce half a marks for each question, each answer. So if they are giving 10 marks for this, if you don't write narration, they can reduce 5 marks. So always better to write the narration. Okay. Number 4. Cash sales 11,200, including VAT of 1,200, have been credited to sales account. So 1,200 is VAT. We can't debit, we can't credit the VAT into the sales account. Number 4. So what they have done is, when they do the cash sales, cash account was debited 11,200, and it has been credited to sales account. This was the transactions that they have done. So if it has VAT, what is the double entry for VAT? This you can't credit the sales. VAT should be credited to VAT control account. Right. So this is a VAT payable. This is a sales VAT. Sales VAT. Or in another term, it's called output VAT. So the VAT amount in the sales we have to debit, deduct from the sales, and that should be credited to the VAT control account. So correction entry, correcting entry, sales account debit. But you can't debit the sales account. But you can't credit the sales account. That should be separately shown in the VAT control account. Sales account debit. Control account. adjusting the sales VAT. Adjusting sales VAT, which is recorded in the sales account. So there are two types of VAT, input VAT and output VAT. We are doing a sales. Say sales 11,200. That in this is 1,200. So actually sales value is 10,000. Sales value with VAT is 11,200. If you divide this, what is VAT? You need to know the VAT basic concept for this. Right? That means value added tax, which company collect from the customers, and they have to pay this VAT to the Inland Revenue Department. This is called the indirect tax. So if we are doing a sales, if we sell the inventory, the stock, our sales price, our income is only 10,000. This 1,200 is a separate VAT, right? So this has to be collected from the customer, and we have to pay this to the Inland Revenue. So therefore, sales account will be credited only 10,000. You can't credit the entire amount. This 1,200 is a liability. It's a liability which need to be paid. Which need to be paid to the Inland Revenue Department, the sales VAT. We call it output VAT. Sales VAT. It's a liability. So sales account should be credited only 10,000. 1,200 should be credited to the sales VAT or output VAT account or the general VAT control account. That's how we record the sales with VAT. They are VAT registered sales. So better to understand the VAT concept. Still, we didn't do the VAT part, but I have done a small video on that. You can check. Yes, you can check this video. Value added tax. So I'll share this. You can check this in YouTube. Right? I'll share this video. You can check this out to have a clear picture on that. And it includes some other adjustments as well. Right? You can go through that to understand the basic concept of value added tax. Right. So I shared in the group. Okay. Now let's go back to our question. Interest expense for the year has been under accounted by 5,000, understated, or they have taken undervalue interest expense. Right. So interest expense for the year has been under accounted by 5,000. So we need to correct this. So how do you correct this? So not accounted 5,000. Expense should increase. Interest expense, that will be debited. And it is not yet paid. Unaccounted means they have not recorded. Right? So it may be a payable. It's a liability. If it is paid, it will be recorded in the cash. But it is not recorded, not accounted means we have to record it under interest payable account. Liability. A liability should be created for the interest. Liability will be created for the interest. Just in the undercounted interest of 5,000. the sixth one. Six. Right. So in the fifth one, I assume that under accounted means they have not considered this 5,000. That is why I didn't take it to the suspense account. Right. You can't take into the payables account. It's interest payable. Payable account means normally we consider trade payable, other payable. So this is other payable, interest payable account. It's not trade payable, so that is why we don't take it to the payables account. We have to show it interest payable. So if you assume that it's only expense account is undercasted, then you can credit the suspense account. Then that is fine. So number six. Net realizable value of stock as at 31st March 2010 was less than the cost by 25,000. However, in computing the profit for the year, closing stock has been valued at cost. So when calculating the closing stock, they have taken the cost, but NRV is less 25,000. So we need to write off the difference. So how do we write off the difference in NRV? Stock written off account debit, or this is the income statement. Income statement should be debit. And from the inventory, we have to credit this 25,000. Just say NRV. Let me explain the sixth question. This also comes under the adjustment. So here in this question, most of the areas are related to the adjustments, accounting adjustments. Right. So under accounting adjustments, we have the closing stock adjustment. So the video which I shared, it has the NRV adjustment as well. You can go through that. Right. So if we are writing off, if the NRV is less than the cost, we have to write off. If the NRV is less than the cost, we have to write off that difference. Let me see if I have a note I share. Right. So just go through this. This is the adjustment for inventory. Right. Closing inventory adjustment. Net realizable value. Net realizable value means expected selling price. So in the normal situation, NRV is higher. But if the NRV is higher, we just record the closing inventory at cost. Stock account debit, cost of sales account credit. But if the NRV is less, it is called an abnormal situation. In an abnormal situation, NRV is less. That means we are planning to sell our stock at less than the cost. We purchase at 100, but we are selling at 80. So this is called an abnormal situation. Why we are selling at less? Either it is due to damage or expiry, right? Or if there is any other reason, maybe a promotion, right? We sell at less than the cost. So in that situation, we have to write off the difference. 100 worth of stock if we are selling at 80, 100 worth of stock if we are selling at 80, we need to write off this 20. Right? Inventory account is only 80. Write off 20, inventory is 80. So why we have to write off? This is a future loss. So according to the prudence concept, we need to write off the future losses. So this is the concept of inventory that we will learn this in accounting adjustment. We have different adjustments in the financial statements. So one of the important adjustment is inventory. Then we have trade receivable adjustments, the bad debt adjustments, the provision for doubtful debt, under provision, over provision, specific provision, general provision, accruals, different types of accruals. So all this you need to do it before doing the financial statement. So under that, one part is the inventory, right? So inventory, closing inventory, inventory damage, inventory losses, insurance claim, inventory sold on sale or return basis on a condition, right? So those areas will be covered under this. Still we have not done that. In our upcoming classes, I will be explaining this part. Okay, next, the question. So in NRV, we write off. So double entry for the writing off is inventory account will be credited. Stock will reduce because we are planning to sell at 25,000 less. So if we are selling 25,000 less, the stock value will be reducing by 25,000 and it will be transferred to the income statement as other expense. Other expense 25,000. Right. So those are the adjustments, or those are the corrections related to the errors. Now we need to prepare the statement of adjusted profit. So as I said earlier, this is a simple thing. First, there are two steps. First, identify income expenses related to the income or expenses which is in the general journal, or the amounts which goes to the income statement. 50,000. Inventory won't go. Return outward. Discount allowed. Sales. Interest expense. Stock written off. So these are the accounts which will affect the income, which will affect the profit. Income, cost of sales, return outwards, discount allowed, discount received. Let me see this. Discount received, sales, interest expense, stock written off. So whatever credit will be plus, debit will be minus. 27,000 and 33,000. Those two plus. So 27,000 and 6,000. Those two plus. And the remaining 50,000, 6,000, 1,200, 5,000, 25,000. That's minus. So profit before adjustment, which was given in the question, 750,000 plus 33,000 minus 87,200. So the adjusted profit 695,800. There's a question, what is statement of adjusted profit? Statement of adjusted profit means now the profit was given before the error corrections. The profit was given, reported a profit of 750. So this was the profit calculated before correcting the errors. Now once you correct the errors, once the errors are corrected, the profit will change. So what will affect the profit? Income and expenses. So here what I have highlighted, those are the income or expense or any amounts which goes to income statement. Right? So those amounts will change the profit. So we use the technique. The easiest way is whatever income or expense credit means, it is plus. Income credit means income increase. Expense credit means expense decrease. When the income increase or expense decrease, the profit will increase. Right? Debit means income increase is debit. Expense increase is debit. Income decrease is debit. So whatever, if it is debit, the profit will decrease. So that's why the debit entries were deducted from the statement of adjusted profit. Right. There was one question. Someone asked me, number 5, fifth one, interest payable account. Can't we have suspense account that rather than putting its interest payable? Yes, that is also, if you assume they have taken only the error is only in the interest expense account, yes, then you can take it as the suspense account credit. So that's based on the assumption that you made. Okay, right. So Third question, amount by which the net asset increased or decreased after rectifying the errors. So that's the difference between this. $54,200. Net assets increased by 54,200. So the earlier profit was 750. After adjusting, the profit is 695,800. Therefore, the profit, the net asset will be decreased by 54,200. So that's how we do the corrections. Any further doubts? You can copy this. Right. So there are many other areas as well. So I will discuss as much as possible questions related to this. Okay. So in tomorrow's class, I will discuss a new chapter. I will try to do a few more questions from the error corrections, and after that we can do the trial balance and preparation of financial statements. A suspense account, they are not asking us to prepare the suspense account also. So we can just leave it. Or take the opening balance as difference. Okay. The questions in the paper, try to do all those questions, and we will check. I will try to share the answers for that. And if you have done it, you can WhatsApp me. I will check.